last thing I'm gonna put on the chart, I'm gonna go ahead and take off the range, and I'm gonna show you this. So this right here are more clear definitions of how lows and higher lows are created in a bullish environment here. So we have this low here. I call it a long-term low. Why? Because on the daily time frame, it purges liquidity, creates a high resistance liquidity run, which eventually forms this breaker, right? This is long-term. This low should not be ran, right? Look at what makes this low long-term. To the left, we have internal liquidity ran, and to the right, over here, we have a higher low. This low right here. If this was within a range, this would be an immediate term low. But because it's actually a daily low, and it probably formed in London, which it did, yep, it formed in London, long-term low. You want these specific lows like that, long-term or intermediate lows, to form in London. New York, you want to see continuations in the bullish market. So when we get to this area here, why is this not an intermediate low? Did it come to rebalance anything? No, it just pulled back into the macro breaker, right? We get a push, we get a failure swing to run to the upside, and then we get another low here. Runs down, institutional order full entry drill, right? Pulls back. I'm expecting this to be a long-term low. We have low, another higher low. This isn't higher low here, isn't it? It's a long-term low. We're looking at the lows that are specific to the range, whether it's internal or external. If this low's ran, we're bearish. Period. This right here is literally OTE. We're not talking about signatures or anything here. We're just talking about algorithmic theory here. Objectively seeking the liquidity, understanding the market structure shift. This whole shift has already happened, and we're playing inside of a breaker. So objectively speaking, this low here is wicking below the breaker, but all the bodies are inside of the breaker. That's why this is a long-term low. When you get this low right here, you see to the left of it, you have a short-term low, right? Failure to run that, and the displacement occurs. And so on, right? We get the same kind of picture up here in this premium. Short-term low, internal liquidity ran, right? Now this low here is an intermediate low, because they could have pulled back down here, and it still would have been within the range, right? Because if this is the low to high, they were technically in a premium. You know what I'm saying? You have to understand price range. If they're in a premium, they can pull down to a discount. But when you look at the levels that they're breaking and the raise that they're hitting over here, you have to understand, okay, well, this is an intermediate low. I don't want to see this ran. You have a BISI here. I want to see this held. Next high, boom, short-term low. This is literally an entry here. This is literally an entry. If you didn't enter off of this right here, this most definitely is an entry. Isn't this your order block right here? These last two up candles. Down, right? This would have been your bearish order block. What's happening here? You get sell side delivery, right? You have a lot of shorting going on within this whole range, but specifically right here. So don't you think that the smart money traders, the large speculator traders, will want to mitigate their orders, have an opportunity to mitigate here? Do you see how that works? It's very, very interesting how it just happens to be to the T. I mean, I can't make it up. Look, it comes straight to that high. Because there's a selling going on here. A lot of selling, right? Because we just hit a macro array in a premium. So when we get the selling here, it could have just stopped here and went on, but it went all the way down and filled the imbalance to the max, creating an intermediate low, creates a run on this high here that I marked, and a pullback. This is a signature. This is a signature. And then what happens? Creates an order block, displaces, runs that high. Right? And then it does the same thing. Short-term low, sorry, I put it wrong place. Short-term low, runs the high, right? pulls back, all internal, runs this low here, right? Short-term low. We don't want it to come back down to the consequent encroachment. All of this here is balanced. We don't want it to run that. That's what creates this intermediate term low. Because you have this order block here that formed, and you have this old BISI here. This is the most we want to see it. We want to see all candle bodies above and close back above this fair value gap and order block. Until what? Until the overall target objective is met, which is this high here, which created equal highs over here, relative equal highs. So when you go back and look at this video, guys, what I want you to remember the most is how I used narrative and how I taught you about the state of delivery, the changes in state of delivery, how I brought up to you that this is a bullish tendency season, how I showed you that we were in a buy program after we had the market structure shift. I also explained to you why it's a high resistance liquidity run here on the macro time frame. I showed you why these are long-term lows, short-term lows, and intermediate lows. Okay, I also broke down in this lesson, why we target certain objectives as short-term traders and why we don't want to trade in certain markets as day traders. The higher you get into a buy program, the more you want to kind of lean back away from trying to put on risk, especially when you get into deeper and deeper premiums, because the algorithm must seek a discount. But you have to be able to see that the algorithm's tipping its hand off to you, saying, hey, this is what we're doing. We're respecting this array. If you take off half the stuff on here, like the swing points, right? And if you just look at the arrays like this, this is a very simply marked up chart. Most important thing that happened was the run on those lows, creating the high resistance liquidity run. Should not go back down below that. We're not looking at all that. We're just looking at from this high to this low. They ran it. They broke these highs here, these short-term highs. They pulled back into optimal trade entry. This is a beautiful change in state of delivery. Market structure shift confirmed, right? Generates equal highs, pulls back into a macro breaker, rebalances it to the fullest, and takes advantage of this consolidation profile to go from a discount to a premium, back to a discount, fully rebalance, gives us that long-term low, gives us that short-term low here, which is a higher low, right? And from this low to this high is optimal trade entry. From this low to this high is optimal trade. You have double optimal trade entries within this. And if you just were to take a fib and put it at the low to the high of the breaker, if you're a scalper and you know all the stuff that I'm explaining to you, you're simply buying in the discount of this breaker at any point in any day, whenever it comes down here, and you are just putting your stop loss at the low of the breaker. There's the trade in here for every type of trader. It's up to you to decide how you pull the trigger. Once it displaces above here, we're in a premium. We're looking for price to hold above this level. Why? Because we have the sell side of the curve here. We want the buy side to mirror that. We don't want to use the left side of the chart to say, oh, it's going to go down. We want to use the left side to target the arrays that basically when these smart money traders went short here on the buy side, they need an opportunity for fair value to actually mitigate their drawdowns. So you see, all of this is that, but it reaches the objective. If it didn't hit this high, just know that 50% is a good target. Even from this low to this high here is a good target. Okay? So, if you guys have any questions, feel free to put them in the chat. I'm going to end the video right here. I hope you guys gain some perspective from this, and I'll see you in the next video. Let's go!